The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 31, Nasdaq's up 13, S&Ps are up 3.5. We have the gold contract down at $4.40, trading at $12.05. Silver's down 9 cents, $17.20. You get oil off 60 cents, $49.67. I missed it yesterday, man. I want to see, did oil fall apart when at the number?
It didn't.
Prior to that, okay.
Yeah, we took a look at it. We didn't do it. The trade ended up, it would have been a loser. I think it stayed pretty steady to where it was trading at.
It already canned.
And then, later in the day. It was at like 52.50, I think.
Oh, I got it. Okay, so it was
later in the day that it digested, because that's what I was watching it, and then, because it actually popped higher right on the initial. And then... we got to pull back. That's for sure.
We get the 10-year note down 7 ticks, 122.29. 30-year bond off 21 ticks, 147.06. And good old King Dollar. King Dollar's down 161 ticks at 101.785. Euros at 105 rather. 102 would be a trip. And we get the yen at 114.90. Let's go over to our man, Mr. Scott Connor from TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here at TFNN, 12 to 1 Eastern Standard Time. Scott, Kevin got a great show. If you haven't test drove the Nadex, the TD platform, Thinkorswim platform yet, great time to do it. Come over to our website at TFNN. You'll see the banner on the top of the side. You can bring the banner up. You can trade with paper money. Scott Connor, what's going on?
Good morning, Tom. How are you?
I'm doing great. How you doing?
Great. Just filling in for Kevin this morning.
That's a beautiful beautiful thing.
Good to talk to you, man. This is fantastic.
And, folks...
Yeah, this is great.
And don't forget, folks, that you can get this right on your cell phone, 12 to 1 Eastern Standard Time. In fact, Scott, I was up in Canada doing some business, and I was listening to Tommy and Kevin, and you guys, you got the IX number that came
IMX,
up.
Yeah. Investor Movement Index that they have.
Yeah, so that was and folks, they get an amazing show. The amount of information that comes out is pretty amazing. But that was quite a number when you guys were going through that number.
Definitely.
Absolutely. That's a new all-time high for the investor index here at TD Ameritrade.
Is it?
And a lot of fun is, like you said, Tom, we get to go through stock by stock and see exactly what, the 6.5 million clients here at TD Ameritrade have been kind of moving into or moving out of.
Yes.
So it's been pretty interesting. And I think one of the biggest surprises was that they're continuing to be letting out some of these stocks that are hitting new 52-week highs. And included in that group was Apple.
I know.
Now, again, it doesn't mean that they're not still long. It just means that they're lightening up some of the positions at these higher levels, which is actually sometimes a pretty healthy thing to see.
Yeah, well, I tell you, what I found so cool, I'm on my way to this mining show. I have my sellout, and I'm listening to this. I'm saying to myself, technology is unbelievable.
It's awesome, man.
And,
it is.
And and that was huge information, man. I said, look.
And what was great was that was Monday. I think they covered it. I didn't even know that was going to happen. I was tuning in, right?
Yeah,
and they're talking about that.
Right.
And Scott, so I was listening yesterday to the program. They were talking about the VIX and volatility.
Okay.
And that was just some great information, Scott. How because I love watching the VIX just to understand actually fundamentally they're going over 30 days out S&P options, right? And then really the rule of 16. You were saying when the VIX is at 16,
exactly.
And I think this is what you're saying. Correct me, but that'll be a 1% move in the S&P, 1 out of every 3 days, Scott? Is that right?
That's exactly right. You got
so
it
how
right.
cool is that to comprehend fundamentally kind of
great.
what that means in just grasping what the market needs to do? And I can grasp that. 1% move, 1 out of every 3 days. Well, we know the market's not doing that right now, right?
Right.
That's why I said
No. We've gone for a couple months without seeing that.
Yeah.
But you're right. I think it was great for clients to be able to see, all right, well, how do I put in perspective where VIX is and what it takes for VIX to, like you said, maintain certain levels.
I really learned a lot.
1% move, you should expect to see it come down.
Because what also happens is that people talk about the VIX a lot, but I'd say 80 to 90% of them don't even know how it's calculated.
I learned a lot this way.
Right.
You know, I understand it's like the expected volatility, and you can grasp what that means, and you can see what the market's moving, and you can see what they're pricing into certain vehicles. But then, so they have the rule of 16. So then you go to 24. Well, it's a 1.5% move.
Right.
Every 3 days. And then you want to go to, 32. You're talking about a 2% move every 3 days. So that's pretty cool to see what you really need when the VIX is going to spike to those levels.
Yeah.
Right, and then it starts making sense that when we get these, like, remember back in January and February of 2016 when we were having those huge moves, we went back and looked, and you can see the bars on the chart that we were getting consistently.
Those are some fun days when it was
moves. Exactly.
300, 400,
They were
up,
fun
down.
days.
I know. It was exciting. It was, man, to be in the market and see that.
Oh, my God.
Right.
What are you guys talking about today, Scott?
Well, we're focusing kind of what I heard you guys talking about. Oil's the big story today, as you can see. And one of the things, Tom, is we were trying to figure out from our side, what is it that brought this on? Because you're right, it didn't come out exactly when the number hit. It took a while.
Yeah, they were saying in the den 1:45 in the afternoon maybe is when it started to really hit. Yeah.
So there's several things that we're kind of considering. That we've got this big Houston Energy Conference going on, and some people are actually attributing to a gentleman named Harold Hamm, as you know, is sometimes referred to the
Continental.
shale
Yeah,
oil baron.
right.
Yeah, exactly. So he was making some comments there about if U.S. production growth doesn't kind of settle out, it could just kill the oil market, and those were his words. So that might have thrown a little fuel on the downward fire.
I bet.
Wow. And again, we're kind of looking at overall positions people have. I think there just were a lot of long positions out there. And, if you get to certain trigger points, as you guys know, it starts,
$50 oil. We're there.
That's right.
Yeah, and we
Listen,
tested it.
folks, right here, TFNN.com, 12 o'clock. Scott, we look forward to the show. Have a great one. Have a safe one.
Thanks, guys. Have a great day.
Thanks, man.
Thank you so much. Stay right there, folks. Tommy and I are coming right back. Dow is up 41.
Has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service, Fibonacci 24/7, is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and we're looking at that oil contract. We're going to go to gas in a second, but you can see that. So let's see. So it started.
It was a cascade. Yeah, there were a couple points.
Oh, look at that! It started
11 o'clock, right?
After 11.
So where was it? Yeah, right there. So 52.70, give or take, right? And I believe.
Yeah,
you know,
at 10:30 it was at 53.39.
Yeah, I think we might have been looking at April yesterday. It had the same reaction, but that's why the prices were just skewing me a little bit on where. But you can see, so it didn't move much on that hour, right, when the news broke. So that trade would have probably been a loser, somewhat. It was a cheap trade. I was just talking to you. It was only $30 total combined with the two spreads. But yeah, go ahead. So 11 o'clock. And that would have been unfortunate. I said if you do that trade and then 11 o'clock the bell rings and the market goes crazy and they just start tanking it for the rest of the day.
They did. 52.68 and then by 2:20 it was 51.31. And you can see, you know, this was teetering the whole time, man. And this is where it gets really dangerous. It kept going inside this range, and you know, this whole time.
Right.
And it just couldn't hang outside it, and you can see, you know, the volumes were down, and it was holding, and then see ya.
And I think the end of November, is that when they made the OPEC deal?
It's right there. That's
big
that bar right there.
Yeah. So we're. It pretty much almost went down to the whole bottom of that bar.
Well, and that's what you get if you can't reject the top of that bar, then especially if you come in with volume, it's like, okay, man, you go to the bottom.
Yeah.
You know?
And I think it was a build of 8 million barrels, and that's what they're talking about. There was huge surplus, man.
Yeah.
I mean, they're figuring out, at $52 oil, there's probably a lot of companies that started trying to crank out some oil, especially it was just 55.
We'd be cranking it out.
56. That's a good price when they were as low as, 27?
Yeah.
A year and a half ago, whenever it was? Yeah.
So let's go over and take a look at natural gas. So natural gas right now, look at this. So that's at $3. And we get numbers coming out on natural gas today, right?
Yeah, so I believe the inventory numbers are at 10:30.
Yeah.
Just like we'll take a look. So I know we can go over your gold trade a little bit, but let's jump in here only because we have 10 minutes until the news is coming out. So we're going into commodity spreads. We're going into natural gas. Let's take a look at the 11 a.m.s. It was great. We had a Tiger yesterday, Steve, that came by the office. Steve had called us from Alaska a few weeks ago, maybe a month ago. Do you remember? And he said, I'm coming to the area. I might stop by. So he stopped by the office yesterday.
Great.
So shout out to Steve, our man. Awesome. And we were talking about the Nadex sometimes, and he was saying that sometimes maybe he looks at the noon ones. I believe I was talking to had so many conversations, but shout out to Steve anyway. But so it's interesting. We'll look at the 11 o'clocks first, but it made me really think about it with oil, how that collapsed yesterday too. You know, maybe you do if you have different expectations, because it's not a huge increase in premium, right? Buying the 11s versus the 12s, you'll pay maybe a little bit more, but for that hour, the market shouldn't punish you. Not right now when there's not too much volatility. So we are at 295, give or take.
You got one right at 295.
We do. So they're going to line up pretty well. So, of course, this is, and let's just pull up the chart real quick to take a look at where. And that would mean there shouldn't be too much action from where we at least were when these spreads got set. There might have been an up and a down. And
we're in the
back.
April contract. Okay.
Yeah. So we're up 70. And let's just see how. So we're going from, and yeah, that's important because I think when you're pulling up on Bloomberg, they're jumping to May already. But on these contracts, we're looking at April. And that's with oil and with natural gas. Okay, so 295 to 315, right? Our positive side. We're buying there. And we're selling the one down to 275.
$26.
$26, not bad.
2.6 pence.
2.6 pennies, you got it.
That's almost saying that it's not going to move. Interesting there.
There's not a lot of premium in that.
Right,
no.
right.
No.
Right.
Yeah. And I'm just pulling up the chart again. So, you're talking about, here would be our 295, right?
Yeah.
And we're talking about 2.6 pennies, right? So 2.6 to the upside, maybe 97.8, 2.6 to the downside. So that's kind of the range that you'd be looking for it to at least reach to break even. Yeah.
So let's go back to the Bloomberg for a second. Let me put up the. So you
just again. So that one's May. We're looking at there,
Yep.
and on Nadex we're looking at April.
Okay, so we just last 6 days we just went 273 to 303.
What's going on with that, man? Is it cold somewhere? It must be cold somewhere. It's not in Florida. That's for
It wasn't
sure.
even cold in Toronto when I was.
Yeah, you guys got some beautiful weather.
It was like 45 degrees, and that's heaven for them. The day before it was like 20. Yeah, this is interesting. So you.
That's UNH you're looking at.
Oh, UNG.
You get a lot going on, I know.
It's so funny. Okay, so this comes right up to the gap. Oh, this is interesting. So the 714, we're right at it. Oh my God. Yeah, I'm going to pass on this one right now. But you know what it is, because the UNH. So the UNH is the ETF for the
UNG. Stay with it.
Thank you. UNG. Let's go. Yeah, UNG, folks, is ETF for the gas contract, and that got smoked. Now it's right up, trying to get into the gap. That can consolidate there. I can see why that premium's not that big, because it's like you're at the top. What if we get out of the bottom? Well, that's 693. That's interesting. So 693 would be natural gas. Yeah, that would be there, right? Well, that's. I'm still not gonna do it, but that'd be quite a move. That's 294.
Yeah, which to put in perspective, I mean, just for the April contract, right? Just because you.
Oh yeah.
That's
okay.
9. No, but it doesn't. That's 9 cents of movement from where we're at.
Right.
That's a fair estimate.
And we only need 2.5.
Exactly.
Interesting.
Yeah.
So, we'll see where this baby shakes out, man.
Just jumping back to take a look. Yeah, so 295, it's still at the same area. And yeah, so you're looking at 25, 26 if you want to make that trade. 2.5 pennies. We'll see where we end up as the news comes out.
And, you know, if you go over, if you want to see it, the broad market, folks, when I was up in Toronto there, it's kind of, it a slow rollover. Now, yesterday was the day that really gave us something. You know, it's subtle, but you had that small expansion. And if we can get this to stay up today, I'd like it to actually stay up.
On some light volumes that we're hoping for.
Because then that would set up that, okay, you know.
Big expectations for tomorrow and next week.
Well, the jobs numbers tomorrow, because what happens is that if we push into this low from yesterday with light volume, that's going to be, hey, that's good. That's saying, hey, we're going right back to the highs again.
Yeah.
You know, and what you did have, which is, I like it when this happens, is that what you had is that you had the S&Ps come down in volume, you had the Dow come down in volume, but yet you had the NASDAQ go up on light volume. And that's actually harmony for the way I look at the market. You know, see, that's it wasn't going into the lows yesterday, it was going into the highs. So that would be saying that you're going up on light volume in the NASDAQ, that means it's bearish. You're going down on the other indices and it's expanding, and that's bearish.
Sure.
And then the small caps are leading. You know, the small caps, these are the ones you have to watch like a hawk today. The reason being is that the small caps did get under their low out here. You know, so small caps now are going to need more than 34 million shares today. So
they got some work to do.
They got work to do out here. There's no doubt about that. We take a look at some of the higher volume stocks out here. You have, let's see, what the heck is this one? Tailored Brands. What do they own? Oh, you know, that's Men's Warehouse, Tailored Brands. They bought it. They're sad they bought it. Oh, my God. You stay right there. Tommy and I come right back, folks. 877-927-6648. We'll be back with those gold numbers, folks.
Natural gas.
Oh, my God.
We got it.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI, oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The gas supply fell 68 billion cubic feet there. Bloomberg is expecting 61.
Yeah, so it looks like we got a little pop off the number. We're at about where you need to be. We're at 297.2, so that'd be $22 right now, give or take within a few seconds. We'll see where it shakes out. Not a huge miss from the expectation. Yeah, so even median estimate was 62. Bloomberg survey was 61. So there's about 6-7 billion cubic feet less than they anticipated. We'll see what happens.
Yeah, if we go over the UNG just for a second.
Sure. Should be getting a little pop.
Yeah.
Yeah, man.
No, it was at 14. Remember, 714.
Yeah.
So that little baby's going to shake, rattle, and roll around there. Okay, let's go over to this poor gold contract and see what we got out here.
What's going on today?
Well, yeah, geez, more than just today, too.
Today, yesterday, the day before.
Well, you know, it's not that the contract's down that far. The equities still are. They haven't been able to catch a bid, but gold itself hasn't been able to catch a bid since the downdraft of 1264 also.
All of March.
Yeah.
Which is wild, yeah.
Right. And, you know, bottom line is that, you know, they got some
big
rates.
run up, right? Yeah, and you know, it was a big run up in terms of...
Yeah. No, there's no doubt.
Yeah.
And so... You know, what you have had, folks, is that, let me make sure I get the right contract here. 1 second.
Sure.
Yeah, well...
No, that's a different one.
Yeah, it is. Yeah, I'm going to roll this one. 1 second.
Roll it.
Let me just see. I see. They're there too early. Interesting. So there's 3,800 contracts there.
Okay.
And when you're looking at a roll, folks, okay, what you want to do is this, okay? GCJ... The only reason you roll is for liquidity. And you can see the difference. Bloomberg already has up the new contract, but it doesn't make any sense because we had 145,000 contracts on this, only 38 on the other one.
Sure.
You know?
Definitely.
So when we do take a look at this, what you're going to see is that
That's why it's good, probably just jumping back real quick, that Nadex was on the other contracts, right?
Yes.
As in Bloomberg kept bringing you to it, but Nadex is probably on the more active contract.
Right, right, exactly. So you can see the contraction's been pretty dramatic. And the 12.17 to 11.95, that's what we're into right now. And, you know, the bottom line is that we'll see whether it holds. You know, I actually bought gold this morning. I hadn't bought it the last few days. And the reason I bought it was when Draghi came out.
Sure.
You know, and
he had some strong words about stimulus.
well, it looks to me like the euro's going to go.
Sure.
You know what I mean? It's like, okay, now you can make the argument that, well, if everyone's going to, you know, basically tighten up, do you know what I mean? Because with the European, I believe that they're going from 60 billion a month, no, 80 billion to 60.
I actually didn't even see that headline number. I was just listening to him speak as I was kind of...
Yeah. Draghi. I don't think he was trying to talk the euro down. That's why I bought gold. That was the interesting part about it. Do you know what I mean? We'll pull that up, but
you can even scroll down a little bit more, even because it was actually prior to this. We're still that's about 840. So here's when he was talking. There you go.
Oh, there
80
it
billion.
is. Yeah, until end of March. Now watch what happens. They go from 80 billion to the end of March, and then they go down to 60.
That's it. Okay, yeah. And April to December, it'll be 60.
Right. So that was, to me, it's like, okay, now the euro's going to have competition with the dollar. I still can't buy in gold.
Okay.
You know, so it's going to be, you know, and if you go over to that contract, we definitely haven't held price yet. And it hasn't held price. It's been a beaten the whole time. What did happen yesterday, though, the GDX, I was watching that when I was getting on the plane. That's a crucial area. It's right into the 29th and 30th of December with dramatically lighter volume. You're talking about the aspect of 47 million versus 140. But guess what? You got to catch a bid now.
Sure.
That's the other side of it. You know, the conference itself, folks. So this is the largest mining conference in the world. Toronto, man. Everyone's. You know, it's amazing that if you're not into mining or into hockey, you might as well not go to Toronto. It's a great city. No, I'm not kidding.
Because I'm sure there's more going on than that, but I bet they are big parts. Hockey anywhere in Canada, and mining in Toronto.
It's so
just
great.
Because the amount of mining companies
everywhere. We love hockey.
Yes,
it's so great. So great.
And do you like mining? Maybe a little.
Yeah. Well, it's so great being in that atmosphere, man.
Yeah.
Do you know what I mean? Sure. You'd hear. I was coming home yesterday in the plane, right, and I heard this mother with 2 children, a boy and a girl. The boy was like maybe 5, and the girl was like 4, maybe 6 and 4.
Sure.
And she had already taped the game the night before on her cell phone, so she's sitting on the floor with them, and she's saying, "Okay, come on, we're all going to watch the game together." It was awesome,
it's
man.
Their pastime, for sure, right?
And they were all sitting on the floor, like, watching it. It's like, they knew everyone. They knew every player. It's like, oh, my
Pretty
God.
Cool. Yeah.
You know, when I was talking to a lot of the CEOs there yesterday, this is the first time I'd ever been up to that show, folks.
Yes.
And I said, man, this thing's really mobbed. And they're all saying, they're all feeling a lot better, I can tell you that, folks. And it has to do with the run that went all the way last summer, too.
Sure.
Do you know what I mean? So it bailed a lot of people out, period.
Yes.
And they were all saying to me, well, guess what? The last couple of years, right, you could be, and you know, the shows that we're normally used to with these trade shows, you don't have as much room in the aisles. This place is, the convention center is so big. They have it in 3 different halls.
They have some nice space.
Huge.
Nice.
And it's open. And he says, see these halls right here? He says, you could be a bowling pin. I mean,
they used to be empty.
Yeah, totally empty. Yeah.
Nice.
So it was a good show.
Good.
You know, bottom line is that you know, the price has helped them dramatically. And
I'm sure they wanted to help them a little bit more going forward, too.
They do. It would have been nice to see him a little bit more paranoid right now.
Okay.
You know what I mean?
Sure.
You know, it's not that they were gun-ho. They were careful. But you know what also happens, and that's what happened, folks, is that there's plenty of small people that went out of business, and, you know, everyone's picking the bones now.
Sure.
That's
it's a good time. I'm sure rates are still pretty low, and if gold has some value, you can...
Right. And their stock.
Their
Same,
stock, all the above,
their stock has
Yes,
it. You know what I mean?
definitely.
So
they get some equity to deal with.
They do.
Yeah.
They do.
Let's go take a look at silver, because when I get, silver, was it last Friday, right before I left? Yeah. So silver, that was a turn on the 2nd. Let's see, silver's right into some major support also. I guess the real question is going to be like, okay, what's going to make this thing move? You know, we know that the short-term rates, they say they're going to go up 0.25%. I guess it's going to be an aspect of, okay, is it a quarter? You know.
Sure.
And that'd be devastating for a lot more than just the gold market.
Yeah, no,
you know?
And it definitely could be too.
Yeah. I mean, that's the one of the new bond guru, Gunlap.
Okay.
Gunlach, I believe his name is. Yeah, it's
might be a little.
Yeah. He's on the take now that he thinks that the Fed is going to go back to just how they used to do it, meaning every 3 months, quarter. That's intense if that's the case, because I remember when Greenspan went up 6 times in a row.
Okay.
It was like, you know, first few times don't. Once you start going to 0.75% and then 1.25%, it just it kills everything.
Right.
Yeah.
I'm sure.
And it's fast. Too.
Yes.
You stay right there, folks. Tommy and I are coming right back. Dow right now is up 20. NASDAQ is up 3. S&Ps are flat. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 18. You get the NASDAQ up 2. S&Ps are flat. We get the gold down 510 at 1204. Silver's down 11 at 1718. Let's go take a look at some of the Dow stocks. You get IBM down $1.83. That's taking a little hit. Caterpillar's off 174. We get Oxy down 90. GM is down 12. You get Procter & Gamble up $1.15.
You know, we looked into that Tailored Brands, too. Did we ever cover it? It's all of them. It's Men's Warehouse, Joseph A. Banks, a couple others. So that'll be interesting to see how they expect to turn those companies around because, yeah, so was it Joseph A. Banks? Well, it's Tailored Brands, but the big headline, right, was Joseph A. Banks bought Men's Warehouse because I believe Joseph A. Banks is probably the second biggest brand, whatever, so that was there that they bought Men's Warehouse. And man, oh man, that was a tough one.
The stock was a $70 stock. Oh my God! This was a $70 stock in 2016. So it's 2015.
Yeah.
My God.
Yeah.
This is a disaster. And that's, you know, I guess when you're looking at that one, it's like, okay.
And Basil's telling us other way around. Men's Warehouse bought Joseph A. Banks, and that was the big. But either way, it's like they're both battling right now, I think, to figure out how to compete in that market because we see that, you know, it's like buy one get 5 suits free type deal.
Seriously,
that's a tough one.
Well, and can you imagine the amount of money that they've spent on advertising?
Oh yes,
it's like, and they can't stop because I guess if you buy one get 5 or get 4 or whatever that is, then you don't need any more suits.
Yeah, no, I hear you. I know.
I mean, depending, you know, someone younger that's still growing does, but you know, once you get the size you're at, it's like, okay, good suits normally good for 5, 6, 7 years easy.
Sure.
You know.
Yeah.
And our man, Mr. Steve Rhodes, he's saying,
just
folks,
so that's the question though. If you're buying one and getting 5 free, is it are they good suits to last for 7 years?
No.
So I don't, you know, that's
right.
what. So you can't go. You know, you can't end it with, you know, a good suit lasts 7 years because that's what I think about when I hear those too.
Sure.
And I'm sure that's what they battle with but they are. I think they're pretty relatively nice. So.
Oh, they look good.
Right. No, I agree. Right.
You know, I was bringing up interest rates, and Steve was saying, folks, in 2000, so Greenspan, it looks like he went up 4 times in 2004. Gold started at $392, and by the time that he ended in 2006, so it's longer than that, gold was $581. And then it actually went to $720. So
it was as high as $720 in May of 2006, and then
And what he's saying is that, you know, it's that you can go up in rates, and the metals don't have to get croaked. There's no doubt about that. That would mean that, you know, do we have inflation cooking? That's what that's going to be the basis.
Sure.
You know, because it all has to do with what is the real interest rate. That's what it really comes down to.
Right.
The thing that was intriguing when he was going up the whole time anyway is that there was so much fraud going on. That was all about the real estate bubble. I mean,
that's right.
It was
2006.
It didn't matter. It was free money, and everyone's getting money and just spending money. It's, you know,
I'll buy this place, and then I'll sell that place, and I'll buy that place, and I'll do a interest-only loan.
Right. All the lie loans.
Because I'm just going to sell it in 6 months anyway and make a bunch of money, and this is great.
Right. Well, you know, hey, and check this out, folks. This is pretty cool. When I was up in Toronto, right? So picture, I'm looking at the real estate in Toronto in a huge way, right? Just in general. And I've never been to Vancouver, and I was meeting a lot of people that live in Vancouver, are in Toronto right now, and they were explaining to me that, so Vancouver has been a hot market beyond belief, right?
Yes.
But they were also explaining to me that not no one, but the majority of people only buy and sell houses in Vancouver.
Okay.
Yeah.
For like, you know, flipping, is that what you're talking about? Okay.
But that's all they do.
Okay.
They were saying that they're so...
You say majority of the people, that's all they do.
That are living in Vancouver.
Okay.
So the people I was talking
majority of the people that live in Vancouver just flip houses in Vancouver?
Yeah, this is the story. Okay, so...
I heard a story from a guy.
Let me finish the story.
I heard a story from a guy. Go ahead.
So let me finish the story.
One guy's story.
So,
all of Vancouver is just real estate flippers.
So picture this, right? They were explaining is that in Toronto, right, there's real jobs, meaning there's big banking jobs.
And this is where does this guy live? In Vancouver?
They live in Toronto now.
Oh.
But they just moved from Vancouver.
Oh, okay.
Yeah.
So the guy living in Toronto told you that everyone in Toronto works their butt off, and the people in Vancouver just flip Vancouver real estate?
He's saying that there's better jobs.
Yeah, but he's a biased guy living in Toronto telling you it's way better than Vancouver.
Yeah. Well, I'm just
The
explaining.
guy in Boston is going to tell you about how great Boston is compared to New York, you know?
Yeah, but I get it.
I know. I'm just giving him a fair.
Yeah.
That's all.
Yeah. Well, the guy might be right.
I think
though.
Vancouver.
They might be just.
There could be. Sure. I would love to know. It's not. Vancouver's a thriving city. There's no way half the people there are just flipping Vancouver property. Okay. No. Oh, I would love. Let's figure that one out. Okay. You want to hold your guns on that statement?
I don't think it's as black and white as you think. I think you don't realize
I don't think you realize how many people that would be that are flipping real estate. If you're going to say half.
Okay.
I'm just as a huge. Yeah. I mean, there's you know.
Their point is it's a huge industry instead of just business.
That would make sense.
You know what I mean?
I mean, it's a huge.
Oh, what do you do? I
city.
flip houses. You go to the next bar. What do you do? I flip houses. I flip houses. That's the guy's point. You know what I'm saying?
Yeah.
So, good old doll. Let's go over DXM. Yeah, doll looks like it's going to hold here. So, you had the first get-go down. You know, we'll see if we can get another sell-off. This is right at the area, folks. You know, what has happened is that the contracts, because we keep changing contracts, it's the same place that you're going into, which is the January 5th downdraft. You know, but you can see the top of that downdraft is 102,420, and this is where the sellers come in. You know, it's and the real, you know, if you're a bull in the dollar, what you're going to be looking for is that they got to get it lower quicker, meaning, you know, this will go because.
Just say that again.
Meaning, if you're a bull in the dollar, right, you're in pretty good shape right now, okay? Because, you know, we've hit this January 5th time. You know, first time we hit it was February 15th to come down. Then we hit it on the 21st. We hit it March 2nd, March 3rd. It came down good. But the longer you keep staying here, it's not going to, you know, it's eating into that bar.
Okay, cool.
You know, so the bottom of that bar is 101,240. You know, so.
Okay.
And if you're a bear, you want it below that 101,240 because that's where that seller is laying. And, you know, that seller more than likely is, you know, a large institution, a bank, a central bank. It's another country that, you know, is just trying to basically.
Unfortunately, it's not us.
No. Hey, you know, it might be our own central bank too. You don't know.
Oh yeah, no,
you know
that's
what I mean?
for sure. Yeah.
Because their worst fear, no doubt, is going to be raising rates and simultaneously having the dollar go higher. You know, because supposedly if you want to do business, you know, and we want to do business outside of the United States, that's going to be pretty tough by, you know, basically having a strong dollar.
Yes, definitely.
You know? It was great being in Canada with a strong dollar.
I bet.
Oh, my God. Crazy. You stay right there, folks. Tommy and I are coming right back. Dow right now is up 14. Nasdaq's up 3. S&Ps are flat. We're going to be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi,
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is up 14. You get the Nasdaq up 3. S&Ps are up 1. And one of the
Tigers posted a great article about that Vancouver, Toronto, and man, yeah, it's just Vancouver's getting smoked to the tune of. Article starts off, and this was from February 5th of this year.
Okay.
But that in Vancouver plunged 40% in January. Sales of homes to a year ago. 25% of attached properties, 32%, just huge numbers. And when you jump down to Toronto, yeah, they have rising prices, rising sales, and there's a lot at play there, right? We were going through it even. You talked about for Vancouver, they put a 15% transfer tax to foreign
non-citizens,
non-residents.
Right.
They was aimed at Chinese buyers, and sure enough, that slowed it down so much that by December, they tried to institute interest-free first-time buyers for their down payment, and say, you can't. I don't think the first-time Canadian home buyer market can compete with the Chinese investor market.
No.
Right? As in cutting off one to replace it with the other, and that's obvious by January, February. But it is interesting. 2 great cities. Either way, awesome. Right. And man, one's like collapsing as the other's. So Canada, it's not like a Canada deal. It's city by city. There's a real difference in that market.
More than likely, though, the scary part, and that's what you always got to watch, would be that Toronto would go next.
Of course. Everything's right.
Yeah.
No, for sure.
Because
that doesn't make sense. There's that big of a difference, really. As in, how does one market peak that much? That's not what happened here as much. You know what I mean?
No, not that dramatic. No.
Not even. I mean, what market was spiking in 2008? As everything was it's like it was all a loan type. Whereas here they've just kind of, it's interesting.
What I have seen though, in '89, what happened is that the whole country didn't crash, but Boston crashed, Florida crashed, Orange County, California crashed, Texas crashed.
Okay.
Alaska crashed.
Okay.
So that was kind of, you know what I mean?
Yes.
But that's still the same thing. You're over here, and those prices have gone too far.
Let's say you had made a lot of money flipping property as 1 out of every 2 people in Vancouver.
Right.
What if would you really then take all that money and highly leverage yourself right now in Toronto? I think that was just such a gamble. To expect that as Vancouver's collapsing, you're fortunate enough to get your money out maybe. It would be tough to, and that's just, it could affect demand at least, where, you'd have to be really nervous or tentative and say,
and the kicker is,
how much can Toronto skyrocket if because Vancouver at some point is going to be back on sale.
Right.
You know what I mean? It can't, it's a thriving city in Canada. Let's be real here. As in, so.
And what happens is that's why I said to you, just give the Chinese about another year and a half.
Sure.
Because now the Vancouver government, I'm sure, is going, oh no, they went overboard.
Right.
Because that article, folks, and thanks for sending it over, that article is saying that now all the taxpayers are going to be on the hook because now they're trying to get the thing going again.
Yeah, basically they said, because it's interest-free government loans and I think even the
down payment.
And, so you don't need anything. Well, the government loans you the down payment, the bank loans you the loan, and everything works out just fine. Don't worry.
And folks, you want to run away from that as far as you can run away because you know that's not all right.
You can't.
As they say, nothing's free.
Yes, and when you're talking about Chinese investor real estate money, man.
Well, when I look at the aspect of that, when you look at either China or Hong Kong, they've been trying to slow down Hong Kong since I've been 30 years old.
Sure.
Never happens.
Right. No, yeah.
You know what I mean? And bang, it crashes 20, 30% again, 35%, comes right back again. Crashes again, comes right back again. Crashes again, comes back again. I mean, that's the whole...
Ride the wave, man.
Oh, it's the whole thing about it. With Andy Hecht always talking about commodities. There's just more people every day. And there's more people over there than anywhere.
Yes, definitely. Definitely.
So. Listen, folks, you stay right there. We got our man, Mr. Basil Chapman, coming up next. And, of course, then we're going to Thinkorswim headquarters. We got Kevin Inks, Scott Connor, Steve Rhodes, Dave White, myself, and it's Thursday. Andy Hecht, maybe.
Yeah, I think he's still moving. Final day. He's going to be back next week. But he got his newsletter out. He just got internet last night. He's plugging away, so he'll be back next week.
Have a great one, folks. Have a safe one. Thanks, pal. Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.